to your lender. Hey, do you have money? Hey, do you want to be a PML? Really? Do you think people with money are going around holding a sign on their head to say, I have money? No, people are watching you. Even if
What's going on, everybody? I'm so excited. Hey, we're back again with another episode here talking about private money lending and real estate. Today, I have a special friend, Keleisha Carter. Keleisha, thank you so much for being here with me today.
Listen, I'm so happy to be here. Like when you reached out and I was like, yep, let's do this. I'm happy to share so many things when it comes on to raising capital and private lending because there's so much information out there. But I'm just happy to be here. I'm excited. Let's do
Awesome.
this.
Yeah, I'm excited as well. Hey, everyone, this is for educational purposes. Want to get this disclaimer out of the way, right? Do your own due diligence. We talk about lessons we've learned as private money lenders and, things that have helped our business grow in the lending space, whether it's us deploying our own capital or raising capital from other investors that want to passively invest in real estate. So please, please, please do your own due diligence, right? So getting that out of the way. Keleisha, so I always start with guests telling me like what was their aha moment. Was it like your dad telling you real estate is the best thing in earth, or was it like an uncle, brother, sister, or was it maybe a mentor, right? Or was it just like a podcast you reading alone, meditating? What was that got you into real estate?
Man, like it's a crazy story. To be completely honest, it was none of those because I don't have a family member or anything that's doing real estate. I'm Jamaican. Real estate is something that you see on TV. Okay. The only closest thing I come to real estate is seen on HGTV. And so it was never the dream to be this or to be in this industry or anything like that. However, I went to school for marketing. I moved to the US and I was working in the restaurant industry. And I realized that I was at a point where I needed to figure out what I wanted to do in my life. I knew that I didn't want to be in the restaurant space for so long. I'm very ambitious, right? But at that point in my life, I was completely lost. And I was like, all right, Keleisha, because you need to get this together, you need to figure out what are you going to do. And no kidding, Edgar, this is what I use. I'm like, I love watching HGTV, right? Because again, I'm trying to figure out what I like at that point. I love watching HGTV. So I'm like, let me just think about this real estate thing. I also love watching Food Network. Those were the two things I enjoyed doing. I was like, listen, Food Network, I want to eat the food, but I'm just not going to be a cook. I'm not going to be a chef, right? So it's like, you know what? The next best thing would be real estate. And I simply put in Google how to invest in real estate. That is all I did. Most of the education that I've or the things that helped me to decide that I want to get into this space was Google. I went on Bigger Pockets. That's where I found this whole community. Forums and those things were completely new to me as well. I'm like, whoa, this whole world exists. And I just went down a rabbit hole of just reading and then started listening to the podcast and then went into the free guides and the book. I was just like, okay, I need to understand this. And then from there, so that's really how I started. That took me to where I am today.
That is pretty powerful, just taking that ambition, right? And being able to say, hey, I know there's a bigger purpose for me. Yes, being in the restaurant business, making money, right? I'm living day to day, but what else, right? What else is there? And I think so many people can relate with that, right? Because everybody's at a different state, right? Whether they're people that are going to college and are, sometimes they're like, yeah, I'm taking these classes, but I don't even know if I'm going to graduate, right? Or like, do I really want this, So yeah, taking those steps is so important. Thanks for sharing that, Keleisha. So you found that you wanted to get into real estate. You went down the rabbit hole of real estate. So once you got in there where you're like, I'm going to go into wholesaling, I'm going to do fix and flip, I'm going to own a multifamily 100-unit apartment.
The strategy that caught my attention was the BRRRR method. Flipping seems so scary to me. Wholesaling, I don't know, something about wholesaling just never really grabbed my attention. But I just thought, again, just by my reading, it was in order for you to build wealth, you need to own assets. You need to have property. So I'm like, okay, perfect. I can do the BRRRR method and I can do it out of state, right? So that, again, All of this completely new. I didn't buy a property in my backyard. I went to a whole different state, and I went to the Midwest, Memphis. Where's that? So that area, because Memphis was a more affordable state for me to
Mm-hmm.
my first investment property. I wanted to do Florida because I was familiar with Florida, but it was too expensive. So I started investing in Memphis, did the BRRRR method. For those who don't know, the BRRRR method means buy, rehab, rent, refinance, and repeat. So you purchase a property, you renovate it. Once you do that, you put a tenant in there, you go to a bank, you say, hey, I have a tenant, can you give me a 30-year mortgage? That way you can always repay your short-term loan, which is a hard money lender, and then you can keep doing the process over and over again. Here's a roadblock I went into. I took out 2 loans to do the BRRRR method. So the hard money loan to start the renovation, to purchase the property, because I had a plan. The bank told me,
Mm-hmm.
hey, you look amazing on paper. You have the perfect credit score. Go take out a short-term loan. We can definitely do a refinance at the end of 6 months. Ah, perfect. We're on the path. When it was time for us to start the refinance, the bank was like, no, we can't give you a loan because you are not a US citizen. Actually, it's not even start the process. We were already in the middle of the process, ready to like finish and everything. Right. And then the very last minute, they're like, oh, we realize you're not a US citizen, so we can't do the refi. And I'm like, wait, what? You ran my credit 2 times. We communicated with you multiple times before we even got the first loan, and you told us we're good. So can you just imagine my brain freaking out?
Jeez.
This is the first time I'm doing something like this. All new. When I tell you, I start putting in Google. I went back in Bigger Pockets, and I'm just searching. What can I do? But the crazy part is, I was so happy I had enough spread with that
Mm.
method. I had enough profit. So even I had to pivot and sell those properties and still make a profit. So this is why it's so important when you hear investors talk about when you need to have a good profit margin or a spread, because anything can happen and you don't want to make a loss from a profit. You never want to buy a property to make a loss. So always have enough room just in case of something happens. So thank God we did. And I ended up selling those 2 properties. And I was like, 1, I will never flip again.
Wow.
2, I will never depend on the bank for any financing again. But at 3, I know I need to find a way for more money because I can't. No.
Wow. So you were in the fix and flip project when you were like, all right, let's start looking at the refinance and figure out, hey, what's this going to look like? What's that loan to value that they're going to lend me at the end at the refinance? Because depending, right, they like on a cash out refi, they'll go up to like 75% of the value of the property. So you were starting to look at those numbers, thinking ahead, come to find out that the bank's like, oh, sorry, we can't do that to you.
Yeah. And the crazy thing is, I was so nervous because the hard money loan was also due. And I was like, okay, this is also nerve-wracking. Where am I going to find all this money to pay back the short-term loan plus the interest to this investor? I think that was one of the most scariest thing. But I learned that freak out for a couple of minutes, hours, but then you got to go straight into solution mode.
Solve, yeah.
Yeah, you got to reach out to people. Like at that point, you cannot be afraid to open your mouth and ask questions and ask for help. Like when I tell you I search, I type in every possible thing. I reach out to people. Like I was like, hey, this is my situation. Even talking to new refi lenders, right? Before they even run my credit, I'm like, this is my situation. Can you do this? Yes or no? Don't tell me to fill out an application because you're going to keep damaging my credit. And I learned that along the way. So I was so upfront with so many refi lenders, and I went through many of them, and I realized that it just wasn't going to work. So I was like, you know what? Let's just sell it. Just sell it instead of trying to refi.
Yeah.
Yeah.
Wow. Just the fact that you went out of your state and jumped into a project like that.
Crazy.
that takes, that's amazing.
Great.
And dealing with contractors, completely, separate state and But at the end, right, being able to solve that problem is so important, right? Putting that your problem solving hat on and being able to figure out, okay, well, if I can't refinance it, I really need to sell it. So let's figure out how, probably by then you've built a relationship with agents and try to understand the market a little bit more. And so once you went through that fix and flip project, then you said, okay, fix and flip, nope, not for me. Wholesaling, nope, not for me. What was the next thing? How did you get into the lending space?
So before I got into the lending space, I tried something else, which is Airbnb. And the reason I tried that is I realized, okay, these properties that I sold, the money is there, but you also need money to purchase these properties. Because at that point, not being a US citizen, I was paying really, really high interest rates as well. So we're like, okay, we need some additional income. And throughout the research, I remember reading that short-term rentals is a great way for you to make like really good monthly income. And we're like, okay, perfect, let's do that. Then we're like, okay, which market now for Airbnb? And we ended up doing it in the Smoky Mountains. Listen, when I tell you, I started looking at those house prices and I was like, whoa, that is a lot of money. For me, that is a culture shock, right? Back home, we use JMD currency. It's not USD. So when you convert that into how much Jamaican dollars that is, it's very, very intimidating. I'm like, where am I going to get that money from? But lo and behold, still made the step and start doing it, and finding information and researching, making offers and stuff like that. That's when we mentioned to friends and family because they saw what we're doing, and we're like, you know what, this is what we're doing. We've done the second one as well. You help us with the second one. Would you be interested in helping us with a down payment on this one? Because I think we had to come up with 130 something or 150 something thousand. And that was so scary. So friends and family came in for that. We used profits from the previous properties to help with the down payment because that time we used a DSCR loan. Again, all of this I'm learning on the go. Okay. So with that, even when we got the money from family and friends, I had no clue that I was using other people's money, or that's what they call OPM or private investors. I mean, I've heard about it, I've read about it, but it was after the fact I learned that, oh, you're using private lenders. And I was like, okay, if I'm taking their money, how can I protect their money? And someone was like, oh, you can use a promissory note. I'm like, a promissory note? What is that, Edgar? I went on Google and I Googled promissory note. And I just found a template online. I recommend do not do that ever. Ever. Went on Google, use a promissory note for that deal. And after that deal, I was like, you know what, this could be a thing. Let me do more research into finding private investors. What does that really mean? If I'm taking someone's money, how can I protect it, whether it's friends or family or strangers? And then I went into a whole rabbit hole of private capital and lending.
Wow. That's pretty awesome. So you acquired, was it 2 Airbnb properties after that fix and flip?
So that
how many Airbnbs?
One Airbnb, and right after Airbnb, I started like, okay, maybe like in less than 6 months, I started raising money and then got a second Airbnb in Texas. So I'm crazy. I don't know. I can do this out of state thing. I guess it attract something about it. So all my properties are out of state when I started.
Oh, wow. That's pretty awesome. So you went into the Airbnb space, right? Because I guess what time year frame was that? Because I know there was a huge uptick on Airbnbs, and it was high demand.
It was during COVID. So I would say about 2021, thereabout. It was super, super competitive. Income was amazing. We got something that was turnkey because that's the best way how to do it. And we started generating capital. I think that's one of the best investments I've ever done. I mean, the market has slowed down a little bit now, but I think it's really good. So that's where I think I recommend wherever whatever strategy that you're doing, look in worst case scenario. Can this property still generate income? Can you cover your expenses? And if you have private investors as well, can you still afford to pay them monthly? because with friends and family, we decided to give them a portion of the cash flow as well. So, and all of that, we figure it out along the way too.
Yeah.
Yeah.
That's so cool. Yeah, because I mean, there was a huge cash flow. Like Airbnbs give you tons of cash flow, so it's awesome how you were able to structure that in your private money lending, even though you didn't know about it, but you were like, hey, bring in the money and we'll split, the profits out of it. So after you acquire that one, then you raise capital on your second one. That opened the door to the lending space, and you're like, oh, this is interesting. God, you could raise capital and invested in other projects or invested in my own projects. I think one thing, right, that comes with this this lending business is the the fact that you have to protect their capital, right? Like protect your investors' capital.
Yeah.
And you mentioned promissory note earlier and how do you structure and secure people's capital. Mm-hmm. When you started raising capital, like what type of projects were you exploring, or what type of markets were you exploring? Was it more of, hey, let me meet like solid borrowers, or was it more like, hey, let me explore this market, or let me explore this type of exit strategy like fix and flips? What did Keleisha do when she started looking at that raising capital space, private money lending?
I did it more for me in terms, because I wanted to build my portfolio, and I realized how amazing it is to build your portfolio using other people's capital. Now, it might sound amazing and you're zero out of pocket, but you're truly never zero out of pocket ever. But it's a great way for you to acquire stuff. And I think what happened was I kept purchasing properties using private money, but I was also running out of deals. And then at that point, I had so many investors coming to me and be like, hey, I have this capital, but I was like, I don't have a deal. So I would connect those persons with someone that I know, so someone in my network. But to me, I was like, if someone knows me, for private money lender or an investor knows me, and they're going to give money to you, Edgar, I want to make sure that their capital is completely protected. I want to make sure that I understand your deal, Edgar, that I can communicate with them. Hey, this is how you are going to get your money out. I don't care if it's a great opportunity, right? Because I care about my reputation. And these are just things that, I don't know, I would say maybe it's instinct, or just the care, or the type of your character as well, that you will think about these things, because I wasn't taught these as well. But I just wanted to protect my investors, and I started like making the connection. And I will say, hey, you're gonna lend $50,000 here. This is what they're gonna use the money for. This is how you're gonna get it back. And I was able to communicate that to that investor. And most of the time, these people were not in real estate, so I had to be able to understand, to explain to them the risk involved without using real estate jargons, for them to feel comfortable wiring that capital. And then we'll break down all the contracts, all the paperwork, that it was super, super important for it too. But I think the biggest thing that I've learned is, before you ask someone for money, whatever asset that you are buying and you're thinking of using private money, you have to factor in the cost of that money. And if you are asking someone, so let me go back a little bit. Let's say a property, you're gonna buy it, and you're gonna keep it as a rental, whether it's a long-term rental, a mid-term rental, a short-term rental. There's a high possibility that you will take that loan for longer than 12 months, and you want to make your investor feel worthwhile investing in this project. So you may decide to give them a cash flow. You have to look, can this asset, for the income that's coming in and after all the expenses, can I afford to pay that investor interest or monthly cash flow? So those are the things you have to look at. And I looked on those properties, and if I see that I have enough spread to pay that investor the capital, then that gives me the confidence to go out there and say, hey, I need $50,000. This is how I'm going to pay you, because I can see that in the deal. A lot of people cannot see that if they're going to buy a property to sell it. Also, when you borrow that money, when you sell it, will you be able to get the money back to pay the investor? That alone gives you that confidence, because you're so confident in that deal itself, and you have the data to back it. So you can go out there and tell someone, this is what your money will be used for. This is how I'm going to pay you back. And this is how your money will be protected. The paperwork and everything comes after. That's something that you should not worry about. Well, you should, but it's not important yet at that stage of the transaction.
Yeah. So, underwriting that deal, right? Like learning the market, right? Understanding what are the properties, days on market, the comps, is the property going to sell for at the end? Right now the market is a little bit weird, right? It's not like properties aren't selling quick enough. But when the investor can buy it at a good price, that means that whoever comes in with that additional, we call it gap funding, right? Or for that down payment and the closing costs and stuff like that, that there's enough meat in that bone, right? Where if something were to go south, that capital can be recouped.
Yeah.
Is that primarily the model that you started working on? Like when, from your fix and flips, was that the money used for, like, hey, Keleisha, you're going to go acquire this property and then you're going to raise capital for that gap funding?
Yeah.
Was that the type of model you started working on?
Yes. So I think when I started, it was I used private money some for the entire purchase for one of them. The other one, I use it for the gap funding, just for the rehab. At this point, I had no clue that it was called a rehab. Now, even when I started connecting other investors, the fund was used for the shortage, right? So you would have most investors, they have a hard money lender coming in, or they have a DSCR loan, and they need help with the 20% down payment, because that's what I used before. Private money came in to help me with the 20%. And now currently I help mainly fix and flippers who need the gap funding, the shortage. Maybe the hard money is giving them 80% and they need the remaining 10%. Maybe the hard money is giving them only the purchase and they need the rehab. So I come in with that capital for a certain amount of time, which usually we don't go beyond 12 months. And we underwrite that deal looking, if you come in to sell this property, we factor in all the costs for that transaction, because when you're doing a gap funding, it is considered very high risk because you are listed in second lien position. That means you have the first lien holder, which is a hard money lender. They're given majority of the funds for that project. So if something happens, right, the first lien holder gets paid first. Whatever is left, the second lien holder, which is given the gap, gets paid second. This is why it is so important for us to ensure that when we're doing gap buying or second lien, there is enough spread. So if that entire project, if this flip, the entire project cost is 200,000, right? And that 200,000, we factor in their purchase price, your cost to buy, your cost to sell, your holding cost, your rehab cost. If that is 300,000 and your ARV is 300,000, guess what? There's a spread of 100,000. So if the market sits longer, if something bad happens, we still have a good spread and we're able to cover our money to pull our capital out of the deal, because our capital plus the cost of our capital, remember, was included in that 200,000. That gives us the confidence to be like, oh, worst case scenario, this is a good deal. And then we would worry about the paperwork and how to structure everything like that. But the the very, very important thing is just making sure that that particular deal is able to pull out the gap funding. It's all numbers. It's all looking at what is the purchase price, what is the rehab, what is the cost to buy, what is the cost to sell, what are my holding costs? Okay, the project costs this. This is how much I can sell it for. And then you can figure out the structuring after that, whether you want to use private money for the entire 200,000, two private money, one comes in with 100 or 150, the other person comes with 50. But at the end of the day, when you sell for 300, you're able to pay off that 200 debt that you have.
Yeah. You set numbers, right? And it's so important because whether you're going to sell that property, let's say that for whatever reason, the property is not selling for a traditional buyer and you need to refinance it and keep it as a rental. We mentioned DSCR earlier, which is a debt to service coverage ratio type of loan used for investors. And the typical cash out refi on those are 75%.
Yeah.
So if your number, if your ARV is, if you do 75% of that and your loan amount is less than 75%, you're going to be okay, right? Being in that second lien position.
Yeah.
But it's so important to understand that. And, we mentioned numbers, we mentioned market, the power understanding that is so important, especially if you're going to do like a second lien position where it is a little bit riskier.
Yeah.
Now, when there's not enough meat on that bone, right, or the numbers aren't there, Keleisha, do you go to the fix and flipper and say, hey, these numbers are tight, but do you have anything we could cross collateralize? Do you implement that? Is that something you would recommend, or you just stay away from that type of deal?
Oh man. So sometimes we do ask for collateral. And this is after we factor in the type of risk that we're taking on. So we look on the asset, we look on the days on market, we also look on the spread. So what's your profit spread? We look on the area like this property is listed in. So we list on multiple factors. So depending on those factors, we will decide, do we want to ask for a collateral? Like if we think, you know what, we're 50-50 about this, let's ask for a collateral. But if we're like, okay, this can be a good deal, but it's super high risk, then we'll just not take it. Business, I've learned, follow your gut. Well, personally for me, the times when I don't follow my gut and have a bad feeling about something and still push through, those deals go south.
Oof.
Or like the few times that I like not follow my gut, like those two deals go south. And then a lot of times it just depends on the operator. We will always look on the operator as well, just to see what is their experience level. Like, is this their first time doing an out of state investing? Is this their first time doing a fix and flip? Or you will find operators where they have rental properties, but it's their first time doing a fix and flip, right? And for us to feel safe, we will cross collateralize one or two properties that they have. It just depends on how much money we are lending, because again, we have to protect this investor's capital. How much money are we giving you? And can these asset worst case scenario, if you have to do a cash out refi, can we pull out our investor's capital?
Yeah.
Yeah.
Keleisha, we mentioned cross collateral just here. And, one thing that comes to mind is like, how do we did mention paperwork, which is, after you understand, right, the numbers, cross collateral, whether you cross collateralize or not, we mentioned first position, second position, that is part of the documentation, right? So if you had a fix and flipper, right, that says, hey, Keleisha, this is my deal, they're pitching you a deal. What are some of the things you right away it's like, okay, like this guy is fairly new or this guy doesn't understand?
So before we even look on the operator, we look on the deal. We do things backwards, right? So a lot of people look on the operator first and then they look on the deal. We look on the deal first. So if we can see that the deal is going to pull our money out, we don't care about you, okay, at all. So what we're going to do is, one, the deal needs to be on the contract. We have people send us deal all the time and it's not on the contract. We're like, hey, if it's not on a contract, we can't analyze a hypothetical because it needs to be on the contract. We need to have the term sheet from the hard money lender that you're using. That is the only way we can truly understand what this entire project is going to cost us. If you need the money tomorrow, nope, not doing it. I'm like, no, it could be a great deal. Nope, not doing it. Why? I don't like being rushed, especially if I've never worked with you before. When you're rushed, it's like you miss certain things. And also it doesn't give my team enough time to do a due diligence because we have to run a title report on this property that you are doing, right? And then we don't draft or documents. We also need an attorney. So we need to, in the attorney in that particular state, we need to give them at least 24 hours to draft those documents as well. So 24 hours, no. And then this is something I've learned. A lot of times you get the paperwork is not even correct. You have to factor in time to review those paperwork, right? To make sure everything is good and you're protected, and then for them to correct that. So I always tell people like closing can be like, give us like 2 to 3 days. If we have an investor and we know where the funds are coming from, budget for 2 to 3 days. That gives us enough time to review paperwork, depending on where the funds are coming from. If it's coming from a retirement account, that's not happening in 24 hours. Okay.
Nope.
And each custodian / each retirement company, their process to wire in funds is completely different. So, and I like to tell investors that because we set expectations. So if you want it in 24 hours, we're not doing it. If it's not on a contract, we're also not doing it. If you think this is a great deal and your profit margin is negative, or it's 10,000, 20,000, no, we're not doing it. And then we'll tell them like, you're not making any money on this. And they're like, no, I'm making 100,000 or 500,000. And it's like, really? Go back to your numbers. Go back to your numbers. And if I know who you are and you ask, Keleisha, can you just share like why? Because maybe I missed something. Then I'll just take the numbers from my underwriter and share it with you. And most of the time, the investor's like, oh, wow.
Yeah, I didn't see that.
There you go. There you go. So those are the main things that we look at first before we even vet the borrower. And then when it's time for us to vet the borrower, now we need the scope of work. We also need your past HUDs past deals that you've done. And let me tell you, so many times we've asked borrowers, can you share with us HUDs just to see past project? So the entity that they'll be lending us capital on, let's say it's Edgar LLC, but their HUDs have Keleisha LLC or Rocket LLC or John LLC. And I'm like, all these HUDs does not have Edgar LLC on it. Give me some story, right?
Right.
If it's yours, fine, that's fine. Because I understand investors have multiple LLCs. If this is yours, fine. Give me the operating agreement. Where was this set up? Give me, and if the operating agreement have 3 members, I need to know, I will need like qualify all those other members. So I need their driver's license. I need their history. And that's when you go deeper into these deals and
due diligence.
Portion of it. Super, super important, because those things that you can miss. Who is signing? If the LLC that the borrowing entity has 3 or 4 members, guess what? 3 or 4 members signing those loan documents, 3 or 4 of those members doing a personal guarantee. It's not going to be on one person. As long as the numbers listed on the members listed on the operating agreement, all of you guys are taking on this loan.
That's so good there. I love the way you set that, right? Because it's sometimes like you'll get one investor out of the group, right, come and request the capital. But to your point, it should be the entire group, entire LLC. So all the members in there should have that personal guarantee. I love the way you're going under due diligence, because it helps, right? So if you're a fix and flipper and checking out this episode and you want to raise capital from private money lenders like ourselves, or you're looking for additional capital, please make sure you rewind this episode and re-listen to what Keleisha said, because it's so important, guys, that you present a deal that makes sense, right? That you understand all the little things when it comes to your LLCs, right? Making sure that you show us, hey, yeah, I do have experience, because it is important when it comes to that, especially if the numbers are tight. We need to make sure that you've gone through some difficult times to ensure that you could resolve like something like oops, I didn't see that coming.
Yes. Because it will happen. It will happen. There's so many things that are out of our control as well. But the reality is, what are some of the potential risks and how can you mitigate those, right? So you won't be 100% be able to mitigate some of those risks, at least, but 99% of them you can. And then this also give my investors confidence when they give me capital, because I can say, hey, there's 10 potential risks of this deal, but here's 9 ways how we're going to mitigate them. There's 1% chance we don't know how to mitigate this risk, or something else is going to pop up, but at least they know all the things that we're aware of. We put things in place for it. And if something pops up, which it will, we are ready to have a solution for that, because at the end of the day, we want to protect our investors' capital. That is very important. Like 99% of my investors, as I mentioned earlier, they are not in real estate. So they don't understand the market, right? They really just come in, I'm going to invest this capital with you. I need a return on it. You take care of all of that. I love my W-2 job. I love growing my business, whatever it is that they are doing. They enjoy doing that. They're just looking for an additional stream of income, and they're looking for something safe. And the biggest thing that I've learned with my investors, they don't care about, I need a high return all the time. The goal is, if I give you this money, can I get my principal back? Worst case scenario, I don't get my interest because this deal goes south. Can I at least get my principal?
Absolutely.
That should be the main thing when you go. And yes, you want to make the money and the interest and the late fees and all those stuff. But if you can get by, if the deal goes south and you can get by your principal, that's a win.
That's a win.
That's a huge
Absolutely.
win.
So we talked about fix and flippers, right? Needing capital. You were just touching on how you, as you raise capital from other investors, and you have your own school community, guys. I'm going to put the comment, her link in here. Y'all need to follow her and join her free community and learn, more about how she's been able to raise millions and millions of dollars from other investors. Because that's a different part of the business, right? Lending it out is one thing, but being able to raise that capital from people that are, that have a W-2 or that have a profession, right? How to make them ensure that their capital is secure and that it's growing. That is a different side of the business, lending business. But if you want to learn more, I'll put her info down below. But Keleisha, tell us a little bit more, right? You raise capital from friends and family. So if somebody wanted to raise capital, right? And they were like, hey, I want to get into the raising capital space. What are some of the first things you would encourage that person to do? I'll just leave it there because, I want you to dig into that a little bit more. I know you talk a lot about it in your free community. So let's dive into that here for a couple minutes and we'll see where,
Of course. So I always try to understand, why do you want to raise money? What's the main reason? Because I find a lot of people talk about, I want to raise money. Why? Because someone else says it, because it sounds cool to know that you know people with money. And then if you're not getting the success that you want, guess what happen? You'll give up. So I want to understand, why is it that you want to raise money? Are you looking to make money right now? Are you looking to build your own portfolio? Based on those responses, I'll be able to point you in the right direction. So if you're like, you know what? I want to raise money because I saw this house on 123 Main Street, or I want to build my own real estate portfolio. Okay, perfect. Before you go out there and raise money, go and find the deal. Go understand that asset that you're looking to buy. Go understand that market where you're looking to buy that asset. And based on the amount of money that you need, go figure out, you will know how much you will need in private capital. And then you can go to a potential investor and say, hey, I've been looking at this hotel or this apartment on 123 Main Street. This is the average price that I'm seeing on it. This is how much it's going to cost me to renovate it. Would you be interested in partner? So many times people don't have a clue what they're going to use the money for. And then you go to someone, ask them for money. That could be a solid deal, but because you are not prepared, you lose that lead and that person doesn't trust you. You're not credible enough. This person thinks that you're Joe. Go understand what you're going to use that money for first. And then you go to an investor. A lot of people go do the opposite. Hey, I heard you're a lender. Hey, do you have money? Hey, do you want to be a PML? Really? Do you think people with money are going around holding a sign on their head to say, I have money? No, people are watching you. Even if you're just starting out and you say that you want to get into real estate, and do what strategy do you want to flip? Do you want to buy Airbnb? Share your process with other people, whether that's online, whether that's in person, whether that's in a professional group that you're doing. Today, I learned about this smart real estate market. Today, I'm learning how to properly understand the deal to see if the numbers make sense, if it's worth me buying. Share that journey with people. That way, when you go and ask a stranger for money, guess what they're going to do? Research you and see what you're doing, whether that's on Facebook, that's on LinkedIn, that's on Google, wherever it is. Because then if they find you online and you don't have anything real estate related, they could be like, you used to do crypto, you used to do Bitcoin, you used to be, you want to get into real estate? You want me to give you 100,000? No.
Right.
I'm sharing this because this was me. Before I realized that I want to use private money, I just was like, you know what? I'm starting this journey and I also want to share it. So I used to just post. This is just me learning as a rookie, because back then they still do, rookie real estate investor. And I was like, I'm a newbie and I'm getting into real estate. And I used to just share my journey online. And I kid you not, Edgar, one of my investors that I know today, I'm the only person that he's ever invested with me. He found me on Instagram And when he reached out to give me capital, I was like, this account is fake. It's a scam, because I went on their account and it has no photos, it had nothing. They hardly posted, but we kept talking. And they were like, hey, I've been following your story for about a year or something like that. And they could tell me about my journey.
Wow. That's
Yes.
so cool.
And they're like, I wasn't even deep into private money at all. And they were like, I follow your journey. I have some capital that I would love to invest, and I trust you. And I was like, all right. I'm just after the conversation, I'm like, okay, this is definitely not a scam. And we set up a phone call and we spoke. And I told him what is it that I was doing, what I'm looking to do, and just answer some of the questions or concerns that he would have. Again, I was completely fresh in this private money space, but he trusted me. Why? Because I was sharing my journey. I didn't just go out to somebody to be like, give me 100,000, give me 50,000, right? Even when I raised $50,000 from a complete stranger, again, on social media, I just literally send them a message. That person set up a phone call with me. Why? When I reached out, I had a deal and I was confident in my numbers. I was like, this is what I'm looking to do with the money. I had a whole one pager to show this is what I'm looking to buy. This is how much money I need. This is how long I need the money for. And this is how I plan to pay you back. I had all that info and I shared it with that investor. And they're like, okay, let's get on a phone call. And then from there, I repeated the same thing on the one pager. You know what he said? I had this meeting with you because you were clear on the deal. And then
Nice.
went and did more research on you. And I saw that you've been doing this for a while. So that gave him the confidence to give me the capital. When you do those steps, it makes it easier for an investor to say yes.
I love it.
But we're
Yeah.
also scared. That's the thing. We're also scared to share the journey. That's the thing. We're so scared. Share it.
Yeah. Share it, especially nowadays with social media, right? And all the platforms that are available.
Yeah.
I think sometimes people just get overwhelmed as well with all the platforms. So just pick one and start.
Pick one that you use a lot and that you're most comfortable with. Just pick it. Start with that. Keep posting until you get comfortable doing another one. You also don't need a fancy camera, editing tool, no, nothing. Like what I tell my students now in my mastermind is really, guys, record a video. Or sometimes we'll do it on a call, like we do our weekly calls. And I was like, all right, you know what? Let me stop. Everybody, pick out your phone. And we might be talking about something. And I was like, record that video right now. And we'll record it and we're like, tag me. And I stay on the call until they're recorded and posted. Guess what? Majority of the time, that raw content get the most engagement on their feed. People sending them DM or commenting with certain stuff. Put the raw content out there. The moment we get in our hands that we need to do this editing, I'm going to get this app, then we just never do it. Ever.
Yeah, that's true. There's very few people that are very disciplined with their time to be able to, properly allocate that. But majority of us are, yeah. Oh, yeah. My kids need to go to a football game or soccer game, and then just
trust me, they just need to post it.
Yeah, I love the way you shared, just share your journey. If you are just starting, like what Keleisha said, share your journey, share what you're learning. If you are going to raise capital, understand that why behind why you're going to raise that capital is so important. Because if you don't have a deal or if you don't have a mentor you're working with that, that has that track record of being able to fund deals and then those deals complete or in a success and that capital returns, when you don't have that history, you could start sharing your journey, but it's so much easier if you tag along with people like Keleisha, and be able to feed off their energy, feed off of the goals they're accomplishing as well. But, Keleisha, one last thing, before I let you go, I value your time and thank you so much for, sharing what your journey's been like. You talked about that gut feeling earlier. I wanted to go back to that because, in lending, it's not all, beautiful, right? There's things that happen in deals, whether it's, oops, the contractor ran away with the money, or oops, the investor got sick, or, all these oops, right? how have you been able to pivot into that big problem solving? Like if you were to share one of those oops moments, and how were you able to solve it? You mentioned earlier, as long as that principal returns, that's a win, right? Was it more like, I'm just curious, because we've all been through some problem, right? And potentially we've even lost money, but learning is so important in this business. So if you can share one of those big learning lessons, that'd be amazing.
I think it's really, don't freak out. That's the first thing. I know it's easier said than done because our brain goes go wired to freaking out. And I take a step back and I think, okay, how can I still create a win-win situation for the operator and for the lender, right? I'm gonna look at, let's say, a perfect example. Had a borrower where the contractor disappeared with their capital. Now, when this borrower told us that the contractor disappeared, we believed him. Why? Because that operator every month kept giving us progress updates on what has been happening. So when we start seeing them not communicating, delays, we're like, okay, something's happened, right? After we had the conversation, they explained to us that, listen, I've been stressed out because this happened and I know your loan is coming due. And really, like, I understand it. My investor at the time, he understood it. We tend to think, if I'm ever in this situation, I'm going to do this. But when you're in it, it's different. For a lot of investors, especially when you owe people money, their goal is, I'm in this debt. How am I going to pay this back? I lost this money. How am I going to get this money back? So you also have to put yourself in the borrower/operator's shoe as well. And then what we did with the private money lender/the person who's giving us the money was like, all right, you know what? These things happen. How about we give you an extra time? So let's extend the loan. How much time do you need to finish the project, come in, finish the project, to list it, to sell it? And he was like a month or two. So we're like, okay, let's extend for another 4 to 5 months. That gives us enough wiggle room. So we just did an extension, the same terms. So they just would, instead of the loan being due in 6 months, the loan would be due in like an additional 4 months. And that is just coming up with a solution to create a win-win for the operator and the lender. Was I nervous to tell my investor what happened? I think just a little bit, but wasn't as much. But the moment I became aware of what the borrower was going through, I let my investor know. I was like, hey, this is a situation that is happening. I have pictures and proof of all that stuff. He honestly has been freaking out and stressed out. Like this operator showed pictures of them sleeping at the property. That's how bad it was, because trying to find a solution to pay it back. And my investor, again, was so understanding. He appreciated the communication as well. I think in this space, we need investors/private money lenders who want to create win-win situations as well. Because I've worked with people before who are like, this is the date that is on the paperwork, January 1st. I need it January 1st. I get it. No, I really, really do. But there are some things that really happen outside of your control that there's no way it's going to happen in January 1st.
Right.
Like, no way. And it's assessing these situations to see, how can we resolve this? What solutions can we propose? Don't be an investor where like, I need my money. Because the more you do that, you stress out the operator, you stress me out. And then it's like, we're so focused on the stress that we can't even think properly. And that is just how humans work. And I'm not picking up for the operator. I just think I've been on both sides of it. So I try to be extremely neutral. And listen, I tell in lenders as well, who are like demanding a date. I was like, okay, you want the money on January 1st, go foreclose. Like, if you are going to shout after me, and if you're going to be rude and disrespectful, and I'm trying to find a solution for you to get the capital, so this operator can finish the project and give it back. If you're like, I want my money in this time, I'm going to tell you, go foreclose. That is going to cost you way more money for you to go foreclose. And it's not a guarantee.
It's not going to be quick. It's not going to be quick.
So I also like, what do you want? Do you want to use my solution that I have, that I'm proposing, right? Or do you want to foreclose? It's all about patience. It's a waiting game or more money. Which one do you want? Do you want to wait, or do you want to spend more money? Being completely honest with your investor, sometimes that's all you need to do.
Right.
and put things into perspective, which they have all right to be upset. They have all right to be mad. Let them let that out. But you also have to take control of the situation and be like, listen, I get that you're feeling this way. I'm a solutions person. Here's what I'm proposing. What do you want to do? Let's make a decision right now. Because you
Right.
complaining, it's not going to solve anything. That alone, that's something that's very annoying. Like I can shut you down when you keep yang, 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 yang. No, like I'm like, what is the plan? What are we going to do? I've decided to come up with solution before I have this conversation with you. Tell me, what do you want to do?
Right.
You as the investor don't have to think I need to come up with a whole solution. No, I'm going to come up with that for you.
Yeah. And one thing I wanted to take away from that was the communication is so important, right? So y'all with that operator, he had a solid month-to-month update communication. That's so important, right? When you're able to find that borrower that does perform that at that level, because there are some borrowers out there that won't update you for months and months, and then you find out that there's something wrong, and now it's harder, right, to be able to come up with a solution because you don't know. So quick tip there. But hey, everyone, I'm so grateful and blessed to be able to spend here, like 50 minutes already with Keleisha. Hopefully y'all took tons of notes, take action, when it comes to, hey, if you're going to raise capital, go find a property. If you're going to fix and flip, go meet some contractors, go build relationships, understand your market, then pitch a deal. Who knows? We could potentially fund it. But Keleisha, again, thank you, my friend. And anything else, where can people connect with you? Where can people learn more about you?
Oh man, every social media platform, it's Keleisha Carter. So go follow me on Instagram, go check out my YouTube. I have a ton of these videos as well that talks about these that I've done, case studies as well, how to navigate certain things. And then if you have questions, reach out to me on Instagram, go join my free school community. I do free webinars from time to time as well. There's a ton of free resources in that. And I also run a private mastermind. But again, that I'm very picky with who comes in because I want you to be super serious about raising money. Why? Because I'm committed my time every single week, meeting with you. And if I'm pouring into you and you're not even showing up for yourself, you're wasting my time. Okay. Like, yes, the money is good, but I'm wasting my time and you are wasting your money. So that private mastermind is only for persons who are truly serious with raising private capital and they want to do it for other people or they want to do it for their deals as well. So there's plenty of ways to connect with me. It just depends what stage are you at and what type of help do you need.
I love it. Well, hey, connect with Keleisha for sure. I'll put all the information down in the comments below, but go give some love to Keleisha on Instagram. But for now, catch y'all to the next one. Peace out, everybody.